40 more since. Aditya Sood is with us. He's fund manager at Incred Asset Management. Aditya, good to have you with us here. Thank you for your time. You know, we have your portfolio across the AIF and the multi-cap fund. The lots of course, commonalities between both. One name which kind of stands out is Indraprastha Medical Corporation. Just wanted sort of to you to talk about this one. I think it's a single hospital. It's not. You can't call it a network. It's a single hospital in Delhi, old hospital. The stock's done well. It's not as if it's an undiscovered story anymore. Maybe a year and a half it was. What's at play here, and what are you seeing here? Go on.
So, hi, thanks for having me on the show. One of the frameworks that we've used in sectors which are generally very expensive, be it consumption or healthcare, is that we'll try to find value opportunities, and if we find value opportunities which are ignored by the market, and we find optionality in terms of PE multiple expansion. So if you look at this hospital, for past 30 odd years, they never went for an expansion. They never had a cash sitting on the balance sheet. Now we believe that 755 beds. Obviously, they have an excellent reputation. They have got the third highest in the industry ARPOB, which is closer to 70,000 odd rupees for a hospital business. They are the highest ROC hospital. They generate 40% return on invested capital, and the reason is very, very simple, that they have lease from the Delhi government, 30-year lease, which has just been renewed. So our view is that the stock is getting into a growth capex cycle, from 755 beds to possibly 2,000 beds over the next 3 to 4 years. And when value stocks, which are cheap in the sector, have growth as a trigger, obviously the stocks tend to get re-rated. If it happens through internal accruals, all the more better. So we believe that, possibly the stock will do well. And, this is an excellent combination of low P multiple with high return on capital employed.
Okay. What's your average cost here? Aditya, for our viewers, I mean, those who are sort of listening to you, just to get a sense, it's at 450 right now.
Yeah, so we would have bought it, 6 months back at, close to 180, 160 odd levels, basically. And we do believe that the, sort of re-rating will continue going forward.
Interesting. Hi, Aditya. Good afternoon and good to see you. When you believe further re-rating, I just missed the number of beds that they have and where is it headed?
So 755 beds, Nigel, essentially, if you look at the earnings, the way they are trending, 180 crores of PAT this year, if they go to 2,000 beds over the next 3 to 4 years, possibly that PAT trajectory will double over the next 3 to 4 years, even if the expansion happens in a phased manner. Now, the beauty about single hospital expansion generally is that it doesn't drag your return on capital employed too much, because essentially what you can do is that rather than having one facility which is like 700 beds, you can do a modular expansion, and that is what we are hoping for. So we do believe that ROC will continue to be intact as this expansion goes through. Any which ways, the ROC is very, very.
All right. The other one you spoke about, the other one that I'm looking at in your portfolio actually is Stovekraft. Now, that stock has done very, very well, but you just rewind, say, 3 years ago, the stock was 1,000 rupee plus stock, and then they went into that capex. They couldn't deliver on numbers. We had a brokerage house last week that believed there's further upside after the stock doubling in the last 6 months. What's your view on Stovekraft? Valuations, there is comfort. They can scale up if demand comes about, and they're saying that margins can expand as well. Your view?
So this is a framework that I've been using, that companies, when they tend to go IPO, they are, sort of overbid, and that is what happened to Stovekraft in the previous cycle. So if you look at, when company went IPO'd, essentially they were doing 40 odd crores of PBT. Accumulated losses were there. So, essentially our forecast is that possibly, that number is going to be like 100 crore sort of a number. And the stock price did exactly from 1,100 rupees, it went down to 350 odd rupees. Now, there is another element of, rural recovery here and low unit consumption. And that is a combination that we like. We like companies when, there are headwinds in a business, companies who gain market share. when there is a tailwind in the business, they could be in a position to, further accelerate the market share gains. Obviously, they are going through a very interesting phase wherein what TTK did, possibly 10 years back, they are trying to mimic that model in terms of having their own stores. More notably, it is a volume leader in, cookers as a segment, but more importantly, the kind of value add that it is doing by launching or getting into new categories and fast emerging as a market leader. Clearly, kettles is one segment, air fryers is another segment, wherein they have dislodged the category number one, and now they are a market leader. So our belief is that, it is a combination of capex cycle coming to an end and ROC improving after dipping. And that is what has led to, sort of re-rating, and we expect this re-rating to continue.
Okay, got it. Aditya, hi, good afternoon. I'm looking at some of the financial holdings that you have across strategies. There's, of course, the Bajaj Finserv. There's the HDFC Bank, I think, in both the portfolios. And then you also have stocks like Chola Mandalam. So tell us, what's the thought process when you'd be feeling really good because HDFC Bank finally is making that move? But from here on, what's the thesis on financials and what would you look at adding?
So if I look at, financials, we were, 6 months back, we took a huge underweight call on, financials, and our thought process was very simple, that essentially, we have had best of asset quality behind us, 40-year best asset quality, NIMs were very, very high. And obviously, there was a deposit war. And that has led to, some sort of a compression in terms of NIMs, interestingly. But we do believe that financials is a sector wherein, we are extremely comfortable with valuations today. If I have to superimpose buying a great company after 3 or 5 years of underperformance is what we have resorted to in most of our strategies. We hate to overpay for greatness, in the sense that if you are buying HDFC Bank at 2.5 times price to book multiple versus a 4 times, let's say 4 or 5 years back, I would tend to question myself and think about this, that whether the scope for price to book multiple derating can happen from here on. I don't think so. Price to book multiple can derate incrementally. And our belief is that, if we look at lending as a sector or banks, lending institutions, our belief is that, you should have ability to go fast and slow. And this is what HDFC Bank management has clearly demonstrated time and again. They have the ability to go fast and slow. And this is what we like about the HDFC Bank approach of doing business. And there could be certain segments wherein, they'll completely stop lending. And this is what we precisely like. We believe that there is limited scope for P price to book multiple derating, and earnings growth surely is going to come through. On Chola specifically, I think so. This is a deep value stock. I've been holding this stock for last 5 odd years. If I have to just do a simple maths, obviously there is a Listco, which is the NBFC, which is a very well regarded stock, and it features in many portfolios. We believe that at some point in time, the general insurance business is going to get demerged from this company. Possibly there is a possibility of, the general insurance business getting listed. We have seen, recently Go Digit getting IPO'd, and we believe that, Chola GI is a much better entity than Go Digit in the sense that, it is a profitable entity. So we believe that there is a value unlocking trigger. The company's Chola is possibly trading at a 50-60% discount. So what we essentially believe is that, we are paying for one business, but not for the other business. And the beauty about Chola Financial Holdings is that both the businesses continue to compound. Obviously, they have a 100-year-old lending history.
Sorry, you're talking about the holding company, right? Not Chola Finance, not the NBFC.
Yeah, Chola Holding. That's correct.
We should actually put that stock up. We were kind of, I think, showing Chola Finance, which is the NBFC. So the holding company has the insurance business. It rests there, and it's got a couple of other things as well.
Chola
that is the one.
Yeah.
This is the one that he was referring to. Aditya, take your point, and about the earlier point about HDFC Bank as well, that they don't have exposure, and they really kind of are very cognizant of not lending to stress sectors. And I was just thinking, it just came to my mind that the one large bank, which I think I'm right on this, the one large bank which does not have exposure to Vodafone Idea is HDFC Bank. I think, so yeah, that's been very, very strong of them for the last 2 decades or so. about monitoring portfolios and calling out trouble early. Thank you very much, Aditya, for joining us. A great conversation as always. Appreciate it.
Well, thanks so much for tuning in to CNBC TV18. Make sure you follow us and stay updated on all our social media platforms.